Here we go. So this is the other part. Candles are a part of the price action, and price action is, most traders trade just off of price action. They don't kind of know how to use indicators. Indicators are like if you're a math teacher or if you're like a scientist or something, you use these indicators and you could calculate where the thing is going, and you got all this extra information. Most people that are traders, they don't know how to do that. They don't understand indicators. They don't know how they work. They haven't studied them to know like what their purposes are. Each indicator has its own purpose. So you have to read deep into why this one's doing that and what's the purpose for, and how to use indicators together. You can't just use one indicator. So a lot of people, they trade and they're very successful, and all they do is use price action. So we're going to talk about the second part of price action. The first part is candles, and we went over that, but the second part is called support and resistance. And let's go over, well, what does that mean? So support, we're going to go over resistance. We're going to go over how to plot it. We're going to go over how to trade the bounce, right, with the price action, and we're going to learn how to trade the break. And a lot of you guys don't know about the break, but that's my other strategy that I invented. And why did I invent it? I always call that, like on G.I. Joe when I was a little kid, there would be like some poison that, Cobra Commander put poison and he tried to infiltrate and kill the whole world. And there would always be, whoever made that poison always had a cure to it. Right? It's always the opposite of it. So the break trade is like the poison to the world, and the bounce is the, that potion that's going to get you healed. The bounce is what you want, and you don't want the break because it's poisonous to your trading account. Break will break your account. That's why I call it the break. But you have to know the opposite of your strategy. The bounce strategy, I know, happens 80 to 90% of the time. The bounce strategy is going to work. Well, somebody said, well, what happens if it doesn't do the bounce strategy that 10 to 20% of the time? Well, that's the total opposite, and that's called the break strategy. So I'm going to just show you a little bit about that. But something that people need to understand is pivot points. A lot of people don't understand pivot points, and pivot points are a certain point where it just pivots at certain times of the day or certain weeks or certain, and, some of these things are mapped out and it really helps you out. And then trend lines. Trend lines are the most important part of trading. Price action is trend lines. So let's look. What is support? A lot of people hear about it. They see it. It's one of those, terms that people are always talking about when they're trading. But what does it mean to somebody that doesn't know anything about trading, that just comes in this week and wants to learn, right? Support levels indicate where there will be a surplus of buyers. So wherever the trade, when you start getting a whole lot of buyers instead of sellers, that's the support, right? Support levels tend to stop price from falling below a specific point. So when it falls to the lowest it's going to go to, then there's going to be a lot of buyers right there, because that means it is oversold at this level and a lot of buyers are going to come in. So the support, look at the support as the floor. Support is the floor of the trade, the bottom of the trade. Now, the whole thing about the bounce strategy, that's what it is. When it hits support, the trade does what? If you throw a ball at the floor, what is it going to do? It's going to bounce and go back up. So you're looking for it to hit support, like the ball hitting the ground, the floor, and bouncing back up. That's the whole bounce strategy. A lot of people don't understand. That's why I named it the bounce strategy, right? The floor. Support is the bottom or the floor, to where when the trade hits that, it's going to go back up. A lot of people are going to start buying. Okay. Well, what does that look like? Right here. This little area inside of here is where the lowest it goes. And you can see the colors aren't going any further than this. Now, it does wick down a little past, but it goes back up. Notice how the shadows of the candles break past support. So sometimes it's going to break wherever you put your support. If I would have put my support a little higher, you see that it goes down here, but it always raises up within that candle to get back in this trade. So that's what the support is. The support is saying this is where a lot of the times it's going to hit and then bounce back the other way. So we could put a support right here. If we put this support line right here, we see it hit 1, 2, 3, 4, 5, 6, 7, 8 times right here, 9 times, 10 times. If we just drew a line right here, this is where it's mostly concentrating at. Now, yes, it does go back lower, but it bounces back up all the time within that same candle. So that's why we would put the support right there. Here we go again. Where's the support at? Well, the support is where it hits most of the time. We're not going to draw. Some people make a mistake and they draw the support at the bottom. Well, these three candles right here are the lowest low. No, those three candles are outliners. These three candles are outliners, you guys. You have to see the true picture here. The support is right around this area right here, where the end of the candle is right here. Boom. 1 time, 2, 3, 4. You could even put these in here. 5, 6, because they're close enough. 7, 8, 9, 10. And then these get outlined. They go down too far. 11, 12. So 12 times it hits in this little area right here. If you could raise this up a little higher, or you can keep it right here if you want to. But in between this line and about right here, it's going to hit 12 different times. And so that hits more than any other time on the bottom. So you can look right here. There's a kind of a support. 1, 2, 3, 4, 5, 6, maybe. But this is 12. So that's where the major support is the most times that it touches. The most time it touches, the more, you have a support of value, because you can get in here and it hits right here. You get in, it goes all the way up here, you win. Okay, it goes back down here, you get in again. It goes up, you win. You hit again, down here it hits, and it keeps on going up, and maybe this time you stay in, and you're up here, and then it starts going down a little bit, and you get out of the trade. Now what? You're not getting in any trade. This is just the middle. You're not taking this back down. You're waiting till what? It hits the support. It hits the support again, goes back up. You got big money again. Now this one right here, this is called what? A break trade. It hits the support, but it doesn't immediately go back up. So you have a stop loss. It might be right here. So you're going to lose this trade. Because why? Because the candle broke through. Do you see on these ones, only the wick broke through, but the candle broke through and went down too far. So once you get down here and it breaks, then you say, okay, I'm going to trade this going back up because I know it really loves this support. So once you have it going back up right here, you see a little bit of green, then you get in and then you just ride it up. So now you lost from here to about here, you lost, right? And you're just waiting, but you want to get in real quick again. As soon as it starts bouncing back up, you want to get back in down here. So you get back in and you want all your money back right here. You got all your money back. Okay. Now you're still in, and look at all this money you got going on. See, so that loss didn't mean anything to you, but it just gave you a better price to get in. Now, some people, when it breaks through, they'll say, oh, no, I'm just going to keep on extending my stop loss down, 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 down. Guess what? How about if it keeps on going down? No, let you lose a little right here, and then get back in and win more. Lose a little, win a lot. All right, let's go over resistance. Resistance is the complete opposite of support. Resistance levels indicate where there will be a surplus of sellers. See, once it hits this point, we notice that sellers start buying, or sellers start selling at that point every time. Resistance occurs where an uptrend is expected to pause. So it's going up, but it pauses temporarily due to concentration of supply. When the price moves up and then pulls back, the highest point reached before it pulled back is now resistance. So resistance is what? The roof. Remember, we got support is the floor, resistance is the roof. And the same thing again, we got the bounce strategy. You take a ball, you throw it against the roof. What is it going to do? Well, it depends on what kind of roof it is. If it's a shabby roof, the ball might go through the ceiling and break the ceiling, right? But if it's a real strong roof, meaning that it keeps on hitting that and coming back down, when you throw the ball up at the roof, then it's going to come back down. It's going to come back down. So that's what we're thinking of. Support, floor, resistance, the roof, the top part. Okay, this is what it looks like. This is in lines and not candles. I told you some people like to trade like this in a line. Now, it looks cool, looks like a coloring book or something. I don't like to trade on the line, but I just want to show you guys different ways that people trade. Here we go. So it hits right here. You can see it almost hit this line. It hits again, goes up and goes back down. This is an outlier. It broke through. So if we would have traded this to go down right here, it broke through, we would have lost. Right around here, we would have been stopped out, but it kept on going up. Do we trade it to go up? No. We wait for it to start coming back down. It started coming right here, right? We could have got in right here, or we waited for it to go down the second time, which this is a head and shoulders layout right here. So I would have known that. And then you come down and it keeps on going down, bounces back up, but it keeps on going down. So whenever we break trade and we lose on that stop loss, we're saying great, because when it starts coming back down, we're going to get an even bigger win. And you see right here how far this thing ends up going when it broke through. So that poison from the break actually made us more money when we got back in. Here it goes again, hitting again right here. And then we got it going back and hitting again there. What does that look like with the candles? Well, with the candles, we're right here. The resistance on this one, they're doing it at the top of the wick. Why did I put that there? Because that's the wrong way to look at this. But this is how the average person, beginner trader, is going to look. They're going to say, how is the highest it went? Well, yeah, the wick is the highest it goes. Oh, I see 4. That's not the resistance. It only hit, you could say this one and this one. Let's say 5 times it hit right there. 1, 2, even I'll give you 6 right here. 3 right here, 4, 5, and 6 times it hit. Okay. Now, let me show you where this is really hitting at. If you bring this line down to about right here, you got 1. This is even continued. 2, 3, 4. This could be considered, that's 5. Then you come over here, you got 6, 7, 8, 9, 10, 11 times it hit right here. So the more times that it hits that area, that's the support over the time frame. See, it only hit up here like 5, 6 times. But if you go down there, you're hitting way more times. That's what you're looking for. Where is it hitting at the most? So plotting. How do we figure out where to plot at? You will find in most situations, it only takes that one well-marked level. That's it. You don't have to do, some people do 3, 4 different resistance lines, 3, 4 different support lines. That's not what you're trying to do. Anything over 3 lines that's on your graph is confusing. You're not going to understand. Even if you color code everything, you're not going to understand everything. So you should only have 3 lines at the most. Well, what do you mean 3 lines? Well, you should have your resistance, you should have your support, and then you should have your price that you're going to get in at. Those are the 3 lines you should have. And that's what I usually do. And then I also put lines like little money, big money, middle money, just so you guys know when to get out. But I wouldn't do that in my own little writing up. That's just extra stuff for you guys. It starts getting confusing if you don't mark out everything very precisely. It starts looking very busy. And if you're too busy, it's not going to be good for your trading. By only marking out the important levels to watch, you will keep your charts tidy, simple, and easy to read. This gives clarity back to the chart and to the trader, allowing the identification of good trade setups and making the anticipation of future price movements much, much easier. Well, what are we talking about? Well, now we're going to do some advanced stuff. Oh, I thought support was just the bottom line going left to right. No, support could be in a diagonal line going up. Resistance could be in a diagonal line going down or up. Right here, we see, this resistance is way too high. This resistance should probably be right here. Look where all these times it hit right here. It hit here, almost that one, this one right here, and that one. That's where the true resistance line is way down here. These are just outliers, these ones way up here. Now, on this one, this is a great map out of the support. The support is moving up. This is an uptrend. You can see right here that it keeps on moving up. So the support should not be level. It should be on a diagonal slope moving up, right? All you need is 2 points to make a line. When I was teaching algebra in high school, it's just 2 points. So you got 1 point here and you got another point right here. Now you're going to know when it's going to hit right here. So you can map this out just to get this big win right here that's going up crazy. And you could have been in there and you could have said, I know it's going to go up a lot. Why? Because at this point, it went up a lot. When it hit again, this one, it went up a lot. So what do you think is going to happen the third time? It's going to go up a lot. So you could have got in right here based off of these 2 markings and got into a really phenomenal trade. Here we go. What do we do here? Nobody knows because there's more than 3 lines. What do we get in here to go down? I would. Now, looking at this myself, I would only take this going down. Why would I take it going down? Because it seems to have, more bigger red candles and more red candles going in my mind. But if you look at it, it's almost the same thing. The green ones are almost the same. Everything's almost the same right here. So you could take this going up and down. The best area that I would get in this trade is this area right here. This is the best mapped out area. I would take this going down at these spots right here, right? I wouldn't even take this going back up because I don't know, because it just came from way down here. So if you try to get in, down here to go up, you might be rudely awakened. So I would only trade this going down on these ones. So down, down, down. And then hopefully you caught this one and kept on shooting down and you got a lot of money from it. Trade the bounce. What does that mean? Buy when the price falls towards support. You're only going to buy when it hits the support, the lowest part, the floor, right? Sell when the price rises towards resistance. You're going to sell when it gets to the top on the resistance zones. Remember, the more often price tests a level, our resistance, our support, without breaking it, the stronger the area of resistance and support is. So the more times it keeps on doing the same thing, then you know we got it. And what do I call that? If you're one of my students from 2 or 3 years ago that's still with me, they know that I call that having a cat on a string. And some of you that are new, you're saying a cat on a string. What does that mean? That means I know exactly what the cat's going to do. I got a cat on a leash on a string that's, 12 feet long. And guess what? That thing can only run around in circles 12 feet in each area that I'm holding the chain. So I know it's going to always come back, or it's going to run this way and then run all the way to this way. But I know once it hits that way, what's it going to do? It's going to run back to me. Run up, run back to me. So I call that a cat on a string. That's my little funny little terminology. I know the doc has way more funny terms than me, but I'm trying to be cool too, like him. Pending order trades. Pending orders to buy and sell. I've been talking about this for years, and now we're actually doing them. I used to just teach those to the classes that we would have, and people would pay large amounts of money. I would have boot camps and stuff at different academies and stuff. But pending order trades to buy and to sell, you're going to place those where it keeps on hitting. You see that it hits every time over and over and over again. It hits, right? So that's where you're going to put a pending order. You see it hit 3 times, and then the next time you're going to put a pending order for you to either buy or to sell. Right here, you're going to do a pending order to sell. Right here, you're going to do a pending order to buy at the bottom. And then when it breaks out, you're straight, because this is a breakout strategy to where you're going to win on the break, right? If it breaks through and it keeps on shooting up, you're going to get a big profit, because when it bounces through, what happens is it breaks through the resistance, and then it'll come right back down to this resistance, and then it'll use that as a support, and then usually it just takes off really fast. All right. Pending orders to sell, you're selling right here every time it hits right here, and then you're going to buy right here when it hits down here. So this is the same thing that we always taught. Now we're using that in the news, and I was telling people how I kind of trade. I really wanted to just allow that to the boot camps, but my brother wanted to break out everything, all the secret sauce and stuff like that. So I said, okay, let's go, man. But I don't really want to be teaching. Let's have everybody start learning it together. But so right here, when it comes down here, you could just put a pending trade. So you don't have to stay here all day. Once you see that it hit here 2 or 3 times, then you could just put a pending trade to buy when it hits again. And then you got money. And then what do? If it's consolidated like this and it's going to come back down up here, then you just do what? A little bit before this, then you put take profit. So you got a pending trade. You're off doing your own thing. It hit right here and it went back up. You're in the trade, and then it closed out for you. You come home, you got profit. That's why pending trades are magnificent, and they're based off of price action. Real simple to do. Here we go. The bounce strategy going down, 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 down. You marked it right here. You marked it right here. So it's going to come back right here, and you're going to get this bounce trade, and you'll get this second one right here. It already hit right here. You make the line coming down. When it hits again, you take it down. It hits again right here. You take it down. That's what the bounce strategy is, because this is on the top resistance line, and it goes down when it hits that. Trade the break. Buy when the price breaks up through resistance. Sell when the price breaks down through support. So it's going to break through like this right here. It breaks through, and then you're going to buy right here on a pending order. All right. Buy. Boom. It breaks through. Now, where would you buy it at on something like this? Well, if the line is right here on the resistance, it's actually down here. That's why I put it a little higher, but the line of resistance will be right here. So when it does go through a little higher than that, you know, that might be $10 over on US 30, then you have the thing pending to buy. So you buy and then it explodes up or it explodes down, right? And then the regular one, the bounce is different. The bounce is when it hits and it comes back in and you're buying on pending sales because it keeps on doing the same thing. The only time you would do this breakout strategy, right, it would be higher. Do you see where I'm buying and selling? Well, I'm selling right here, right? And I'm buying right here. It's very close. Now, it's spread out more when I do a pending trade to buy or to sell on the break strategy. I don't trade the break strategy, period. So I'm not going to do this, but I'm just telling you that I've invented another strategy. And if it does do this strategy, I lost the trade. And I'm not mad because this is only going to happen, you know, probably 10% of the time if you read everything right. 20% of the time if you don't know what's really going on and you're just the bounce and break off of price action and you're not knowing anything about indicators. All right, this is what it looks like, right? Boom, it hits, it comes back in. Do you see how the resistance line is right here? It barely goes over, but it comes in at the same increment of time on one candle. So it's really not an outlier. It's just going a little bit higher and coming back in. It did that each time. So all you got to do is sell up here. You sell at this line, or when the momentum stops going up, you sell, and then you got a good money. Right here, it breaks through. You're in a sell, and it went up a little higher, but you made money. You're in a buy down here. It hits right here. You're in a buy. You won. It went up here, went back down. Then you won again. Then it hit again. What? It hit right here on support. You won again because it went all the way up here. Now, this is when you would lose. So you won 1, 2, 3, 4, 5, 6, 7 trades in a row. And then guess what? The break happens. It goes back to the resistance, but look, it bounces through the resistance. Oh no. So you have your what? You have your thing set right here, stop loss. So you're not going to lose that much. You won 7 trades with a lot of money and you lost 1 with a little bit of money. So what do? You wait for the momentum to stop way up here. And what do you think is going to happen up here? It's going to come back down. It's at least going to come back down to take that resistance and turn that into a support. So it'll go back down, turn the resistance old line into a support. So it'll come back down. You take this all the way back down on a sell. When it hits right here, then you get out. Because guess what? Usually when it breaks through and it hits the old resistance, it turns into the support. And this becomes the support level. It will hit and then bounce back up. Hit this again and bounce back up. That's what happens on the break strategy. It turns resistance to support. It turns support into a resistance. So it breaks through on the support, and then it comes back and it hits and it comes back down. This would mean this becomes a resistance. Before it was a support. Pivot points are really cool. They're more of like a reader. You know, like me, I love to read around and learn this and learn that. So pivot points are like, if it hits this spot right here, it usually starts going the other way. It's not like too much of a support and resistance. It's just like, it just hits that point over and over and over again. And it goes the other way. Simplest way to use pivot point levels in your forex trading is to use them just like your regular support and resistance. That's it, right? Your currency pair touches a pivot level, then reverses. The stronger the level is. So, you can go right here, and this is the website that we use to tell us, is something strong or weak? Is the euro weak versus the dollar? Things like that. So currency strength meter. Well, on the currency strength meter, you hit right here. It takes you to the currency strength meter. But if you hit pivot points right here, it'll take you to this page. And it'll tell you the opening and the closing highs and the lows. But down here, there's something called a pivot. All right, and these pivot points are very exciting to me because this means this is in the middle of the trade. You got support 1, support 2, support 3, resistance 1, resistance 2, resistance 3. So this is the highest the trade's been in a long time. This is the highest it's been around right now. This is another resistance level. So if it shoots through this resistance level, it's looking for this one. If it shoots through this one, it's going to be looking for this one, right? So you're always trying to know when the next resistance level is. A Fibonacci support and resistance levels are a little bit different. This maps that out for you too. So my son, he loves to trade Fibonacci. Fibonacci is a good trading tool, but people rely on it too much and you get hurt because it sends out it's like a ruler saying a perfect scenario if it went up 2 inches or went down 2 inches, but there's no such thing in trading. It's not easy like that. But probably about 70% of the time, the Fibonacci is going to work out for you. So keep your stop loss low and you can win on the Fibonacci, but it's not as good as a 90% or 80% strategy. Always remember that. These resistance levels are good because if it keeps on shooting down further, then you can say, oh, it's going to go all the way down here, right? So what would you do? You would get out. If it hit this support level, if it went to like 93.30, $1 underneath this support, then you put your stop loss, you're out of there. But when it gets down to this one right here, 91.98, guess what? You get back in and you're saying, man, that's the second support level, so it should go back up from here. So you got a good position. So you don't have to wait, $3 from right here and say, oh, I hope. Well, you already know it can keep on going, and it can keep on going down even further. So you get out on a stop loss and get back in at the next support level. It's not about continuing the trade and going down $3. No, you lose $1 here, you get back in right here, and you win $2 going up. You always want to win more and lose less. You don't want to not lose. Some people, they have a problem of not losing. They don't want to lose. They don't want to get stopped out. They don't want to get stopped out. So they continue to lose, and it's not good. Trend lines. Trend lines are your friend lines. Always remember that. Trends are our friends. Trends are our friends. Always remember that. You want to always go the way of the trend. You never want to trade the opposite of a trend, period. As the name implies, trend lines are levels used in technical analysis that can be drawn along a trend to represent either support or resistance, depending on the direction of the trend. Think of them as the diagonal equivalent of horizontal support and resistance. That's all it is. These trend lines can help us to identify potential areas of increased supply and demand, which can cause the market to move down or up respectively. So it's trending which way? Up, everybody says to themselves, because I can't hear you, but it's going up right here, right? So it hits right here and then it hits right here. Those are your 2 points. And then what do? You draw this line with the ruler. In the olden days, this is what they did. They had to print out this piece of paper and draw. No, we don't have to do that anymore. All you do is you use the support and resistance lines on the magical trading view, and then you're good. You know what's going to happen. So it hits right here. The next time that it hits in this diagonal line from this point to that point, you draw with the ruler. Boom, it hits. You win again, going up. It hits again right here. It went up. Hit again. You got back in. Hit again. Got back in. You keep on getting in because it's hitting your line and you love it. The trend line, the surfer guy, going downhill. This is a good one because right here it hit, and then these two it hit, right? So you draw the line. You could have drew it right here, and then when it hit again, you take it down. Boom. Right here, man, it's close. It starts fumbling right here. I'm going to get in to go down. Okay, good, right? I start seeing some green candles. I'm out. It gets back up here. Yeah, I like this. I get a big candle going up. I get one candle going down. Okay, I'm in. I take it back down. Get out when you see 2 green candles right here. It's going, okay, right here, you're in. Boom, it hit the line. It hit the line. It hit the line. It hit the line. That's 4 trades in a row you got. You're feeling good. Now it starts going down. You got major momentum. You get a green candle going up, you get out. Right here, it said, oh, it's so close. Look at this big green. And then it started out going green, and then it started falling down. It almost hit my line. I got in. So I won again. Boom. It started going up green. I'm out. Here we go again. It goes all the way up. Oh, beautiful. Right here, it hit. I already got in. And what happened? It went down. Resistance and support. The top on a consolidated is the resistance. Every time it hits here, it goes back down. Every time it hits the support line, but you don't even know the support. You know the resistance because of these two, you marked it and it went straight out. Okay, or you could have waited for this one and you get in right here. Right here, you can't get in because you have no reference point. I would probably say this is the support right here, and I'm getting in these trades right here, right? And then it goes down further, but I'm looking at this little area right here. You see this where the most action. You're not going to get stomped out by it going right here. You just stay in. It's beautiful, beautiful trades right here. Right here, it hasn't been up here in a while. You get in right here, and it comes crashing down. You're winning lots of money, man. You got the white building, the office building with your money, and you're renting it out and making all kind of money with your life. Does anybody have any questions about support or resistance? Go ahead and raise your hand and I'll unmute you. Support and resistance. We just learned about price action. This is the #1 way to trade. Anybody have, how come nobody ever has any questions? That's what I'm scared of. I even tried to come on. I didn't come on at 8. I came on at 6 because I was like, man, maybe everybody's eating dinner at 8. And maybe that's why they're not asking questions. So are there any questions? Go ahead and raise your hand and I'll unmute you. Maya, you eating dinner? Maya.
Hey, what's going on?
Hey, is there anything you think they need to ask a question, or did you get anything out of this, or did you already knew this stuff though mostly, huh?
No, that was good. I don't have any questions. Maybe now I just can do like a real life trade based off what you thought. I guess show them in real life.
All right, we got the Mac Trader. He has a question. Go ahead, buddy.
Hi, how's it going?
Oh.
I just have one question on just to complement supplement what you're saying about the trendings. How would you manage the you got a stop sell on the pending order? I mean, you got a per se a sell limit or a buy limit. How would you manage the difference between the buy stop and the buy limit on these on this example that you're saying right now with the resistance, and how would you manage that?
Trying to think. Okay, can you say it one more time? I'm sorry.
Yeah. You're giving the example of the resistance,
Mm-hmm.
and then we got out for example, we're going to do a pending order for a buy limit. You have the option of buy limit or a buy stop. I've been practicing on the buy stop, and I haven't fully understood the buy limit function. So on the examples that you're putting now on the resistance and lines, how would you put in a trade? What would be the difference on those two?
Okay, so the buy stop means that the trade is going up and it's going to catch it going up. The buy limit means that you want to get it when it's going down, and then basically you put the trade in and then it will grab it when it goes down. So if you look at,
yeah, so like if right now so if it's 1846, but you want to buy it when it falls to 1840, then that's a buy limit. But if you want to buy it when it goes to 1850, that's a buy stop.
So you're betting on that's gonna go up again, and you're gonna catch it going down, and that's basically what it is.
But the other way is when it goes down, you want to buy it because you believe that it's gonna fall to support, so you'll buy it at support. So that'll be a buy.
Okay. Yeah. Okay, I got it.
So yeah, the trade is right here. I'm just trying to, so I can show you on a visual representation. So, okay, the actual price is white. Okay, so the trade is right here, right? Now, if you want to grab the pending trade when it's going up, then this is gonna be called a buy stop.
Buy stop. Okay.
because what it's saying is it's gonna buy when it stops through this price. Like it's gonna go up, and right here it stops, but it's not gonna actually, the trade's not gonna actually stop, but it's gonna take your trade right here. So that's where it's stopping at to take your trade because it's on its way up. Now, if you have a buy limit, the buy limit is the exact opposite. Buy limit is like, it's kind of like how I was saying on the support and resistance. So this is the resistance right here, right? And it's going, well, we're talking about buys. Let's do the support. So the support is right here. Every time it hits here, we want to get in this trade right here on this line. We can see that, right? So, well, how are you going to buy this? Well, this is going to be a buy. If you get it when it hits this line, like let's say it's down here, and you know that the buy, I mean, you want to buy in right here and it's way down here, then you're going to put a buy stop in. So as soon as it goes back up and hits this line, you're going to buy and it's going to take off like this. Now, if the opposite of that is a buy limit. So let's say the trade's right around here, actual price, and you have a buy limit down here. So if it does go down here and touch, it's going to buy. And then hopefully it comes back up. So it's just the actual price is right here. If you want to buy stop, then it has to go up. If you want to buy limit, it has to go down to touch that buy. And the total opposite if it's a sell stop. So if it's a sell stop, then it would be down here. So it'll be the opposite, right? Buy limit. Let's move this over so I could just write this out because I understand what you're saying. So here's the actual price is white, right? You guys understand that?
Yeah.
Okay. And then if we're ever going to sell, then we're always going to use red. If we're ever going to buy, we're going to use green because that's the bear color in the bull color. Okay. So to take a sell stop pending trade, then it's going to have to come down here. So actual price has to come down, hit this line for the pending trade to be active. If it comes down here and hits this line, it's going to be active. Now, but if we have a sell, we have a sell limit, it basically has to come here and then get in. So it has to come right through down, and then we want to keep on going down, 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 right? Or a sell limit is when we think it's going to hit the resistance. It's going to go up first and hit the resistance, then it's going to come back down, right? If we get a sell stop, it's like a news trade to where we're saying, if it does go this low, then we're going to get in because it's going to start running really fast. Okay. Now, we don't really want to use sell stops in the real, if we're not trading the news. Okay. Because why? Why wouldn't you want to sell stop? Because you want to sell limit. That's the bounce strategy. The bounce strategy is to grab the sell at the highest spot it's going to go so you can make the most money when it comes back down. So you want to use sell limits if you're using the bounce strategy. Now, the sell stop, you're only going to use because the news is going to run so fast and you want to catch the trade while it's running really fast. If you put a sell stop right here, right, but the price is right here and you want to buy it when it gets down here, guess what you should do? You should buy it up here. You should be in the trade already. If you really think that it's going to hit here and then you want to get in and go down, well, you're already right here thinking it's going down. You get in right here off of a regular trade to sell. And then when it gets down here, you're like feeling good because you think it's going to keep on going down further. So you're only going to use sell and buy stops on the news, basically. That's the only time where I try to teach people that the sell stop. But the sell limit, that's more of what you're going to be doing in the buy limit. It's going to go down and then it's going to go back up. So you got it at a good spot.
Okay.
Yep.
Okay. Got it.
Like Thank right you. Here, right? It goes way up here, let's say, and it comes, well, it started right here, went way up here. That's not a good example. Let me see. Right here. So it came down here. You already have this mapped out because, you see the line right here and you come up here, you're on this candle and you're saying it almost touched right here. Next time it's going to touch right around here. So you put a buy limit in for 33139.56. And when it hits right there, you know, it takes off, goes up, and then you get out when you see it starting to come back down a little bit. And the same would be on the resistance, right? You draw this line between these two, and then you see right here, it comes up, hits this line right here. You already know where the line's going to go because you already drew it out pretty far. So you say, okay, hit right here. I'm going to get in at pending trade 33139. Now, if you're doing pending trades like this, you're watching it the whole time. You're not just going to be able to walk away from this, because how about if it starts doing like something like this and it takes off the whole trend that is going on? Yep.
Okay.
That was
Got
a
it.
great, man. That was a great question, man. Because I'm gonna tell you right now, a lot of the people were confused on that. That was a good one. Thank you for
Yeah,
that question.
this morning I was playing around with a couple trades, and to be very honest, I made on 10 cent. I made a couple of 10-cent buys, and I put I don't remember if it was a buy stop. No, it was no, yeah, it was a buy stop, and then a sell. I don't remember exactly what I did, but at the end of the day, I made about $70. And
Wow.
then I lost 50 just because of that one mistake.
Yep.
So,
That's 70 on a 10-cent trade. You're getting there, brother. Because if you think about it, if that was a one volume, you would have made $700 off of that.
yeah, but I would have lost 500 too. So,
Yep.
I
But
guess it's just practice.
hey, and now think about this though. Let me show you something with what you just told me, right? So you won $70, okay? While I'm trading over 10 most of the time. So 10 volume, I just won $7,000. Okay, and then I come back and lose 5,000. But 2 trades, I made $2,000.
Yeah.
You're a successful trader.
Okay.
Yeah, good job. All you want to
Okay.
do is lose more than you win, and then you're making money.
All right.
Yep. Don't worry
Try it
about your
again.
losses. Hey, keep your losses little and don't even think about them. Get over
Okay.
those things so quick, because all you want to do is win. But the losses are good when they're little, because you're like, man, at least I didn't lose more than I won.
That's what happened this morning. Yeah. That's
Good
great.
job.
Okay.
Good job, my brother. I'm proud of you.
All right. Thank you.
Brian, did you have your hand up, Brian? I think you had your hand up, but I think you put it down. Did you have a question, Brian? Raise your hand again. These are everybody's questions. Bryce had the question. Here we go, Bryce. How's it going?
I'm doing well, I actually just want to chime in real quick about my phone died when you were actually in the first half of the lesson. So I just a quick question about dojis, which that was all interesting. All the different variations. So they apply to basically they apply to every variation of length of time. So they dojis apply to the minute, they apply to 5, they apply to the 4 hour, and so forth and so on. Correct?
Yes,
so you
sir.
can apply the same principles ultimately.
The bounce strategy works on all time frames, but for the enter into a trade, you don't want to enter in a trade at a super high time frame. You want to enter in a trade at 5, 10, or 15-minute things. And sometimes if you're just making a lot of trades, what they call scalping or sniping, doing something really quick for the quick kill, the little bit of money, then you could turn it down to the 1 minute. But you usually want to be on the 5 to 15-minute time frames to get into a trade. But to study a trade and see what direction it's going to be going for a longer term, or what it's been doing in the past, you need to look at a higher time frame so you could see more of what happened in a day's time or 2 days. Can you imagine, looking at 1 minute and trying to figure out what happened in the whole day? It would be like you having like the microscope on and you're trying to look at somebody's arm. Like, yeah, you could look at the atoms in the cells in the arm, but you ain't gonna be able to you can't even see a piece of hair on the arm. Or if you back up, 5 minutes is like you just see your hand in front of you and you see the nails and you see, right? But if you back all the way up to a helicopter and your hand's on the ground, can you even see what's going on the trade? Not really. So it's a perspective of being able to look at your hand, being able to look at it's like that perspective that the human lives in. Like looking at my computer right now, right? If I'm in my son's room on the other side of the house, I can't see my computer. So it's not a good perspective. But I do know what happened for a week. That's good knowledge that I have, but that's not going to help me get into the trade because I can't see what's happening. So to get into a trade, you need to have the perspective of what we usually are looking at. And that's the 5 to 15 minutes. That's like what's happening right now for the next hour is the 5 to 15 minutes, right? If we go 4-hour trades, it's like we're at a bird's eye view. And if we zoom into 1 minute, some people zoom into seconds on a trade. It's like when you're that zoomed in, it's like you're looking at like the nucleus of an atom, bro. But we're really trying to study like what's going on in the hand.
Yeah.
You see? Yeah.
Yeah.
Good
So,
question.
so the second half to the question was when you're establishing an uptrend and you're, basically you spot a reversal, whether it be, the Bollinger or the indicators or the MACD or whatever, and you're trying to catch the bottom, but you want to kind of, gauge whether it's going to be a longer term trade. I mean, you can't set an uptrend without having an uptrend is what I'm saying. So can you use the simple move? Can you use a moving average to gauge an uptrend, or is there a way to, I guess I'm asking, is there a way to gauge a longer uptrend before an uptrend even happens? Does that make sense? Is there a
Yes.
way to see if it's, it's going to be more than,
Yeah.
just kind of a pop or whatever?
Yeah. So on an hour, if you're looking at the hour, right? This is an uptrend right here. As long as it's over this little simple moving average. This is the Bollinger Band. The middle of the Bollinger Band has a simple moving average, right? So
Yeah.
when it's over, the candles are over this line, it's in an uptrend. If they're under this line, it's in a downtrend. Right here is in a downtrend. So how many candles determine if it's in an uptrend or downtrend? Well, in
6,
my
right?
trading philosophy, it's 6.
Yeah.
So there's other master traders, they have different ways that they say this and that, but me, I'm 6. So 1, 2, 3, 4, 5, 6, it's in an uptrend. Now, if it's in 12, 6, 7, 8, 9, 10, 11, 12, that's in a super uptrend.
Okay.
Right? Because what does that mean? That means that the higher time frame is still going to be in an uptrend. So that's 100% uptrend right here. 6 candles. And then if it's 12 candles, that means it's in. So we go and we look at the half an hour. Well, what do we notice right here? It's in an uptrend the whole time too. That's how, I do it, because a half an hour, what? Every hour candle, you get 2 candles on the half an hour for every hour candle. That's all it is. In 5 minutes, it's going to take you, what is it? 10, 11, 12. It's going to take you 12, right?
Yeah.
12 candles for an hour. So that's what we're looking at. Like,
So basically, if you don't see an uptrend established in, let's say, a 5 minute, then you zoom out to maybe an hour or 4 hours, and you can see if an uptrend's been established.
yes, because you don't want to trade. Like right now, it's going up, it's going down. This isn't a good example. Let me show you something like this right here. Okay. So we're here, and this is a total uptrend. We see it 6 candles, right? So right about here, it's in a total uptrend. So then we look 6 more candles, and now we're in a super uptrend. A super uptrend is the way I trade. It's the second style that I invented, the super trend. So right here is when this line becomes vital, the EMA. It's the exponential moving average. This tells us like this is the support when it's in a super uptrend. So when it hits here, it's usually going to go back up. Look what happens. It hit, went back up. It hit again, went back up. Hit right here, went back up. Hit right here, went back up. Now, is it going to eventually go through right here? It broke. So we won like 4 trades by doing this style. 1 right here. Let's see how many times we could have won. 1. We could have got this one. This is close enough. 2, 3, 4, 5, 6, 7, 8, 9 times. 10 times we won because it went back up right here. This is when we took it right here, the 11th time, and what happened? Well, we still won. We got it one more time, right? But we got in again right here, and it kind of leveled off, and then it went down, and it stopped us out. But we won like, 8, 9 times we won, and then it broke through and just went the wrong way. But do you notice what happens? Now, The other trading style is what? The bounce strategy. So when it's super trend and it stops super trending, right? Guess what happens? You got it right here. You got stopped out probably right here. You wait for it to stop going down. And then you look at the other indicators and guess what happens? It tells us this is the bounce strategy to go up. Look what
Come
happened.
back up.
It went up. You get it? So even when you
Yeah.
lose on a super uptrend strategy, the one time you're waiting to get back in because what happens is it's going to bounce from the bottom. It's going to give you even. So you got in right here. You got stopped out probably right here. You lost, let's just say you lost $1,000, right? But now you got in right here and just going up this much is $1,000, $2,000, $3,000, $4,000, $5,000. So good. You lost $1,000. So what? Now, if you would have stayed in this trade right here, took it all the way down here, you would have been out $5,000, and then it came back up and you would have broke even. Does that even make sense to lose $5,000 and come back and break even right here? No. Listen, you get in right here, you lost $1,000 on the stop loss, you lost $1,000. Then you're out of the trade. All this time is going down, and then when the perfect bounce strategy happens, what do? You win 5,000. So you could have either stayed in this thing and won 0, broke even and been happy, or you could have lost 1,000 here and won at 5,000. You would be up $4,000. That's the thing that happens with people. They keep on wanting their trade to keep on going down because it's going to reverse back up. No. If you think it's going to go back up, get out and then get back in when it gets to the lowest so you can make the most money. See, this is a bounce trade right here that we would have won. It said it was going up right here. We got it. And that's why that the bot is official. Go ahead, Bryce. I'm sorry. I seen this. The bot said something. I got all excited. My fault. Go ahead,
No,
buddy.
I was just agreeing with you. That's it. You explained it. I got it.
Okay. Look at this. I made this little flyer today because I got the beasttraderbot.com coming out. That's going to be the next thing that I'm inventing. But yeah, so that's basically, what's going on with this. And does anybody else have any questions? I would love to answer some questions right now. Oh, we got one in the chat. 1 second here. I am getting understanding. Michelle's getting understanding. Beautiful. You're so smart. You're going to understand it. Everybody on here is a genius trader. You don't have to be the smartest person to be like a genius at trading. I'm telling you, I've witnessed some people that couldn't get past the 5th grade. And they're crazy traders, man. It's just the way the brain works. And then I know some people that are like supposedly the smartest people in the world, and they would not understand trading, man. It blows over their head because it's like they're too smart or something. So I don't know. It's always weird. So wherever you are, I believe you can really learn how to do this. Does anybody else have any questions? Let's ask some more questions here. Just raise your hand if you have a question. Any questions? Any questions? And so Monday is the day that I usually just train. It's full course training. And so this is basically, I hope you guys know this is Monday, even though it's not Monday Beach, it's Tuesday, right? But the market on Monday was closed till like later on in the day. So this is actually like the market coming back on Monday. So anytime you got like holidays and stuff, the Monday is the day that you don't want to trade. Is Sunday and Monday. So you don't want to trade on Sunday or Monday. Trust me. Those are like the worst days, unless you're trading the news. Just trading is just not really that good. But so this is a day that I always train on Monday when you join the academy. I know I invited some of my friends in. But if anybody has any questions, even if you're my friend, just you can ask a question. Any questions? Any questions? Maya, where are you at? Maya. No. Dave, where you at? Dave, you here? Nap, what's going on, Nap?
Oh no, I was just watching US 30 like at 7:30. It just did a big old red candle going down. I was just looking to see what there was a news that was dropped from Spain. The unemployment, that's what drove US 30 down.
Yeah, see, you learning the news. That's beautiful. It's a
Yeah.
good way to make some money.
And look
bro.
at this still, look at it, yeah, at 7:30, bro, when the thing, because it was like 20 seconds left. And then I was just looking like, just trying to get all the, like, Maya, she be on with the other news and stuff. And look what it's doing. It's still tanking.
Yep. It sure is. Here we go right here. This is the news.
That's another thing. Yeah, at 7:30, we got to really pay attention to a lot of these terms because you can be in a trade, like especially US 30, and all of a sudden it just do a reverse, and we don't even know now. It give us the time and the seconds on Trading View on when the report is going to drop from wherever the world, from China, Spain, or whatever. You see it?
Yes.
Yeah. So that's
Actual
something that we
time.
gotta really watch.
That's
out
where I
for.
get my news from right here. I get my news from
Oh
this.
yeah. That's on the back office.
Yeah, this is the news that I look at every day. So this is what happened today. We're coming across this 10 o'clock or 11 o'clock time next. Euro German import prices, the CPI for Chef. So if anybody trades Chef, I used to trade Chef big time. Tomorrow, do we have any good? We got right here the USD. Joe's job. This is gonna be good. 7 a.m. is gonna be good. This is gonna be good right here. Vehicle sales all day. That's another big thing. The FOMC meeting minutes. This is one of the 6 top things with the news. So tomorrow's going to be a big day for news trading. 7 a.m. Also at 11 a.m. our time. And sorry, my time's set up wrong. 1 second, you guys. Let me tell you exactly what time that is. Hate when that happens. Okay, here we go. Let's look at what this says. This is okay. 7:49. Perfect. All right.
Look at that thing. Look at that thing. It's still going down.
Yeah.
US 30. That's crazy.
So you gotta be ready to trade if you want to. There
Switzerland
goes that
about to
bot though.
drop.
That bot, man. That bot. Always he got a different kind of brain, man. That boy, he's like
I did
he's
a
like
US the
Superman.
Euro USD, and it didn't even it passed my damn by. It just took off.
That's the Superman, the bot. All right, you guys. God bless. There's no other questions. I think Bryce, you're supposed to call me up. You got my number, Bryce, right? Call me up and let's do what you wanted. And does anybody else have any questions? I know I got the shirts in and the sweaters. I want to mail those out tomorrow to everybody that bought them. I know nobody paid for them yet, but let's try to get these shipped out tomorrow. So go ahead and WhatsApp me privately or text me. I know Pedro that you already are trying to send me the money. You're the only one so far, but everybody that orders something that told me to buy it, please get back to me so I don't have to look all the way back in the WhatsApp and see who ordered what. Just try to get to me tonight so I can get these shipped out tomorrow. All right, you guys, God bless. Hopefully you guys learned a lot, understand it a lot. I
Thank
got
you.
Brian too. I was going to talk to you later. I'm going to talk to Bryce first and then Brian. And then let's get you guys. I know people always say rock and roll. I'm going to say, let's get you guys contemporary Christian and gospel then. All right, bye. I'm a corny guy.
All right, y'all.
Oh, Damon's on. Oh, I forgot. D's on right now. You guys stay on. Man, I'm sorry.
Yeah. No, don't worry about it. Don't worry about it. I need
Well,
to.
tell him, get him to come back in.
I don't know. All right. How y'all feeling?
My fault. Dang. Wait, D, I got to stop recording.
Okay, stop recording. I got it.
You took over hosting.
I got it.